All right, so now we are going to do the section number 1 of the F8 exam kit, and these are the objective test case questions from your Kaplan kit audit framework. The following scenario relates to the question number 1 to 5. So this case study, a small case study, is actually for the question number 1, 2, 3, 4, and 5, 1 to 5. The board of the directors of sister company are concerned that they are not currently applying best practice in terms of the corporate governance and are seeking to make improvements. So they do not think that they are complying with the best practices. The company currently has 3 non-executive directors on the board who are paid a fee which changes annually depending on the company's performance. Now, hopefully you remember the corporate governance. So their NEDs are taking the performance related pays. The NEDs all sit on the audit, nomination, and remuneration committees. There are currently no formal documents setting out the responsibilities of these committees. At present, sister company does not have an internal audit function, but the directors are establishing the team which will be responsible for the range of internal audit assignments. The following is the current proposed structure for the internal audit. So far, there's a company, they are not complying with the best practices. Their NEDs are getting the performance-related elements. Their NEDs does not have the delegated formal responsibilities. There's no internal audit function. Now they are looking for the internal audit function. The following is the current proposed structure. So who is heading up the internal audit department? The finance director. Now, the finance director is someone who is responsible for maintaining the financial records, supervising the financial function, and now he's sitting in the review of those financial functions. So, head of internal audit department, that means the chief internal auditor, internal audit manager, audit assistant, and then there's another audit assistant. The only role still to be filled is the head of the internal audit, that means the chief internal auditor. There are 2 potential candidates. Paul Balling, a consultant who helped design and implement the company's current control system, and Maria, who is currently an audit manager at Rossi and Bell, an audit firm which has never been used by the sister company. Out of the other 3 members of the proposed internal audit department, that means the internal audit manager, the finance, 2 of them have moved from the other departments in the sister company, and one of the audit assistant has audit experience. All right. Now you have the option. Select whether the following should be included in the formal document regarding the responsibilities of the audit committee. Select whether the following should be included in a formal document regarding the responsibilities of the audit committee. Now, audit committee, do you remember? Their main objective was the integrity of financial reporting and integrity of the external auditing. That means anything which is related to the reliability of financial reporting, and anything which is related to the reliability of the audit. Now, it covers both internal and external. So, to monitor and review the effectiveness of the newly established internal audit function. Yes, definitely, because this is their main role. Yeah. To evaluate the balance of skills, experience, and independence of the board members. No, this is the responsibility of the nomination committee, not the audit committee. To take responsibility for the appointment and removal of external auditor. They can just deal with the engagement letters, dealing with the audit issues, but they will not be appointing or removing the external auditor. It will be done by the shareholders themselves through the board meeting, through the AGM. The audit committee can assist in the hiring of the firm, but they cannot select the firm. They cannot hire and fire. Although they can do that in the emergency situation, but not in the ordinary course. So no, that we have to tick it over here. So just no. To monitor and review the effectiveness of the internal financial control established by the company. Yes, as I made it easier for you, that the reliability of the financial reporting and the reliability of the auditing. This is the first that was easier. Now coming towards the second, which of the following options correctly describes the deficiency relating to NED's remuneration and makes a valid recommendation for improvement? So this is the deficiency and this is the recommendation. Which of the following option correctly describes the deficiency? Which option is correct? Deficiency comprises NED independence. NED should be remunerated on the same basis as executive team. No. Comprises the motivation of NEDs. NED's remuneration should be tied to the profit targets. Seriously, no. Comprises NED independence. NED remuneration should be a set amount based on the time committed. Yes. Comprises the motivation of NED's remuneration should be linked to the individual performance. No. If these type of questions are coming in the exam, seriously, you will be getting 100 marks. All right, this was quite easy. Now you're having question number 3. The board is in the final stages of establishing the internal audit department. Select one option from each column which provides appropriate recommendations to improve the effectiveness and independence of the internal audit department. So they're establishing the internal audit department. Select one option from each column, because there are 3 columns. 1, 2, 3 columns. These are the columns. Select one option from each column which provides appropriate recommendations to improve the effectiveness and independence of the internal audit department. All right. Reports to internal audit department, report to finance director, no. According to the best practice. Chief executive, no. To the audit committee, yeah. Because we discussed that, remember, when we were dealing with the internal audit. So who is the head of internal audit department? Let's go back to the question. There were 2 possible options. There are 2 potential candidates, Paul Balling, a consultant who helped design and implement the company's current control system, and Maria, who is currently an audit manager at Rossi and Bell, an audit firm which has never been used by sister company. So the Paul Balling is a person who actually made these controls. So if they are reviewing these controls, then this will be a self-review threat, because the Paul Balling is the person who actually made these controls. So preferably Maria. And remaining staff member, appoint more senior staff with audit experience, no changes needed. All the staff should be new to the company. So what was written regarding the existing staff? Out of the other 3 members of the proposed internal audit department, 2 of them have moved from other departments in the sister company, and one of the audit assistant has audit experience. So no changes needed. Only one is having the experience. So this is not good. All staff should be new. No, because there should be some staff who have existing know-how of the company. Appoint more senior staff with audit experience. Yes. So we have choose these 3. 1, 2, 3, because we were required to select one option from each column. Now the question number 4. The board has started to compile a list of tasks for the internal audit department to carry out once it is up and running. It has been agreed that the first assignment to be completed will be for internal audit to review sister company processes over capital expenditure to verify if the right items are purchased at appropriate time and the competitive price. So they are just confirming that whether those assets, non-current assets, the one which belongs to the capital expenditure, because usually the capital expenditure is of the significant amount, and they're just confirming it whether those things were actually needed and whether they were actually bought at the right prices. What type of internal audit assignment does this represent? A value for money audit. Do you remember VFM when we did internal audit? That involves three E's. And those three E's were economy, efficiency, and effectiveness. A management audit, a financial audit, an IT audit. So what they are concerned about, process over capital expenditure to verify if the right items are purchased at an appropriate time and at a competitive price. So IT audit just confirms the IT related things only. So this is not the IT audit. The financial audit just confirms the cost. And that means they're just tracing out like whether there are no frauds involved, they are being purchased at the right amount, there is no under or over invoicing. A management audit represents the audit of the management and its operations. So they want to confirm right items, appropriate time, and competitive price. So this represents value for money audit, VFM. This is A option. When deciding on the role of the internal audit department in undertaking operational audits, which two of the following should the team not be involved in? Now, operational audits means audit of the operations, audit of the entity's ongoing operations. So they are doing the operational audits and saying which two of the following should the team not be involved in, not part of the internal audit team. Which two of the following should the team not be involved in? All right. Observing procedures carried out by sister company staff. Reperforming procedures documented in procedure manuals. Designing and implementing internal control procedure to address deficiencies. Report reporting findings directly to the board of directors. Authorizing transactions and performing recalculations. Which two of the following roles should not be performed by the internal audit team? Observing procedures carried out by staff. Yes, because they are internal audit department is there for the review, so they should do this. Reperforming procedures, yes, because they need to confirm whether those procedures are conducted correctly. Designing and implementing system. No, this should be done by the management. Internal audit department will be reviewing that and will be giving recommendations. So designing should not be done by the internal audit department. Reporting findings directly to the board of directors. Yes, because they are there for reporting regarding the entity's internal control system. Authorizing transactions. No, they are just there for review of those authorizations, not the authorizations itself. So C and E, these are the things that should not be performed by the internal audit department. Now, the following scenario relates to the questions 6 to 10. You are an audit senior of the Bark and Company and have been allocated to the audit of the Foliage Company, a listed company which has been an audit client for 8 years and specializes in manufacturing musical instruments. Okay, so the client we are auditing is from last 8 years. Jane leave was the audit engagement partner for Foliage Company. Jane Leaf is a person. And she had completed 7 years as the audit engagement partner. She has recently been rotated off the audit engagement because obviously this is, do you remember, long-standing relationship. This is a long association of senior personnel with the audit client. We did in ethics. The current audit partner has suggested that in order to maintain a close relationship with Foliage Company, Jane Leaf should undertake the role of the engagement quality control review this year. We also did this thing when we were doing the case study questions. The total fee received by Bach and Co. for last year amounted to 16%. Do you remember the high percentage of fee? So I'm just mentioning you the name of the slides from the notes. So that was long association of senior personnel. And this is high percentage of fee. Hopefully you remember. More than 15%. The current year total fee income for audit, non-audit, and tax service is expected to be greater than last year. The audit manager for Foliage Company has just announced that he is leaving Bach and Co. to join Foliage Company as the financial controller. The audit manager Foliage has just announced that he's leaving Bach. So what was the name of this slide? Remember, employment with an audit client. Employment with an audit client. So now hopefully you remember the threats as well. What is the most appropriate response to the suggestion that Jane Leaf takes on the role of the engagement quality control review? So she had been involved in the audit of uh, what is the name of the client? Audit manager of Foliage has announced that he's leaving Bark and Co. to join Foliage. Foliage is the actually client. Bark and Co. is the firm. So Jane Leaf has audited the Bark and Co. Foliage Co. Just mixing the name. Foliage Co. for 7 years. And now, like the new partner is saying that she should be acting as the engagement quality control review partner. That means reviewing the work. So which of the most appropriate response to the suggestion that Jane Leaf takes on the role? Jane Leaf could take the review role immediately. What do you think? What do you think? No, she shouldn't. Because she has already done. Now she cannot done any assurance thing. Jane Leaf could take the review role immediately, but additional safeguards. No, she can't. She shouldn't. Jane Leaf should not serve as the engagement quality review for a period of 2 years. Yes, because she should be rotated for 2 years at least, because she has already completed the tenure of 7 years. Which is the least appropriate response in relation to the fee income received by Bark and Company? Least appropriate response in relation to fee income received by Bark and Company from Foliage Company. Response means what they should do, what the firm should do. Bark and Company should assess whether the audit and non-audit fee would represent more than 15% of gross practice income for 2 consecutive years. Yes, they should be doing that because they will be needing for that. But least appropriate response, if the recurring fee are likely to exceed 15% annual practice income this year, Bark will need to resign as auditors of the Foliage Company. Why they should resigning for? Why they should resign? Why the firm should be losing the business? I told you. If the recurring fee are likely to exceed 15% of annual practice, additional consideration should be given as whether the taxation or should be undertaken. Yeah, reducing the assignments, reducing the dependency. This is what we discussed when we were doing the ethics. Reducing the dependency. They should consider whether they should go for more assignments or not. If the fee exceeds 15%, they should be disclosed to those charged with governance. Yes, we discussed that. So, what is the least appropriate response? That means the inappropriate. Why they should be leaving the client if their fee is exceeding 15%? This is not something like practical, that if the fee is exceeding 15%, then you start losing the clients. The firm cannot sustain. So, B option. Yes, they're for if they are having the fee more than 15% for 2 consecutive years, then they will be conducting actually a pre-issuance review. This is for this pre-issuance review. When the fee is more than fee percent for 2 consecutive years and significantly more than 15%, that means they should conduct a pre-issuance review. But before giving the report, they should review their audit work by some independent partner. But we cannot afford, the audit firm cannot afford to lose the client if their fee is exceeding. This is something impractical. All right, which ethical threat will be created when the audit manager commences employment with the audit client, and what action should be taken to manage the threat? Now, probably you remember that the audit manager is now going to the client and will be acting as a financial controller over there. Intimidation. Now, intimidation is when uh, the manager should not be allowed to take the role of the financial controller. We cannot stop them. This is something not practical. We cannot tell the audit manager not to join them as a financial controller. This is his right. If he's going, fine, let him go. Familiarity. The composition of the audit team must be reviewed and changed as appropriate. Yeah, because the current team will be too familiar, maybe friends and things like that. Confidentiality. The manager should not be allowed to take. We cannot stop them. Self-review. The composition of the audit team must be reviewed. Self-review thread. No, he's not reviewing his own work. He's not coming from the client to the firm. He's going from uh, firm to the client. So self-review is where this is vice versa. So yeah, B option. Which two of the following are the fundamental principles as stated in the ACCA Code of Ethics and Conduct? Fundamental principles of ethics. Do you remember the mnemonic? Sorry, we skipped one question. Sorry. Select whether the following statement describe a rule book approach or a conceptual framework approach to ethics. Select whether the following statement describe a rule book approach or a conceptual framework approach to ethics. Now, do you remember uh, the difference between the rule-based approach and the principle-based approach? Hopefully you remember. Clearly define laws for the auditor to follow. Law, when you just hear the term law, now law is something legal, then that means it is from the rule book. Useful in a dynamic profession. Dynamic means changing. So when there is something changing, there cannot be a rule, there can be a practice. Conceptual framework. A set of guidelines which the auditor uses judgment to apply specific circumstances. Specific circumstances mean, and judgment means that there will be an option to think yourself what to do. So it's a framework. Easy to know what is allowed and not allowed, what you can do and what you cannot do. So this is a rule book. Common sense, rule and principle. Which two of the following are fundamental principles? Do you remember the mnemonic? Professional behavior, integrity, competence and due care, confidentiality, and objectivity. So objectivity is here. One, professional skepticism. It's not the fundamental principle. This is all about having the questioning mind, investigative approach, being alert to the condition. Professional judgment, no. Independence, no. Confidentiality. So these two. Very good. Now, the following scenario relates to the question 11 to 15. All right. You are the audit manager of Mirinda and Company, and you are planning the audit of the Milbury Company, which has been an audit client for 4 years and specializes in manufacturing luxury handbags. So you are actually the audit manager of Mirinda and Company, and the client, this is client, let me just write client firm. The audit senior has recently resigned and is now employed as a financial controller. Again, employment with an audit client. During the planning stage of the audit, you have obtained the following information. The employees of Milbury Company are entitled to purchase handbags at a discount of 40%, which is a significant discount. The audit team has been offered the same level of staff discount, gifts, and hospitality. Now you have done so many questions that this should be now uh, be quite easier for you guys after doing the long case studies. Objective test questions are nothing then. From a review of the correspondence file, you note that the partner and the finance director have known each other socially for many years and in fact went on holiday together last summer with their families. This is again a copy paste from the case study. Uh, Familiarity. As a result of the friendship, the partner has not yet spoken to the client about the last year fee, overdue fee. Now, this should be quite easier for you guys. Which of the following statements in respect of the relationship between the new financial controller and the audit firm are true? The financial controller, which was previously the audit senior in the firm. Which of the following statement in respect of the relationship between new financial controller, which was previously the audit senior, and the firm are true? Which of the following statements? Audit approach should be revised to ensure procedures and items to be tested are not predictable. Yes, the first option is fine. Because we have already done this. Because he knows how you do the audit. He knows what sample you choose. So you should change it so that he cannot maneuver the things. He cannot keep the things according to that. Which of the following threats to the objectivity does offer to purchase handbags at a 40% discount? Isn't it too difficult? Self-interest, right? Yes, because obviously when you are actually giving, you're having the discount, you have to support them as well. You just want a discount to be taken because of the luxury handbags, and 40% is a significant amount. You can even, purchase those bags at 40% and you can sell in the market at the full price. Just giving you a business idea, anyways. But obviously, you cannot do that. Which of the most appropriate response with respect to the discount offered by the Milbury Company to the audit team? Do you remember the politely thing? Which is the most appropriate response offered by the Milbury Company? There was a thing we used to discuss politely, politely, politely. The discount may be accepted as it is the same as the offer to the client employees. No, 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 no. The discount should be rejected. Do you remember politely refuse? All right, so select which threat to objectivity is created by the information. Okay, remember the one thing. Here, what I have done in the question number 13 and question number 12 is that I have not read the other options because I was pretty sure regarding these MCQs. I'm the teacher as well. In the exam, you should read all the options, okay? So because anything can be over there. Because I found it straight away in the A and B option, so that's just I ticked it straight away. But in the exam, you have to read all the options. Remember this thing. Select which threat to objectivity is created by the information obtained from the review of the corresponding file. Select which threat to objectivity is created by the information obtained from a review of the corresponding file. The partner and the finance director have known each other socially for many years. Why they know each other? They shouldn't. Familiarity. 20% of the fee last year is still outstanding. Now here it is quite easy. It would have been difficult if it was self-interest and interpretation because both of the threats come when there is overdue fee. But right now here there is only self-interest threat. There is no advocacy because you are not representing the client in either of these two cases. Which is the most appropriate response to the outstanding fee, overdue fee? The auditor should resign from the client. Now, if we are resigning from the client, then who will be collecting the fee? Not practical. The auditor should report the client to ACCA. Is it something fight going on with us? Are we too childish that we start reporting each other, just like the kids do? They go to the parents and say, hey, look, this kid is fighting with me. No, we shouldn't go to the ACCA because ACCA does not have to do anything with your personal clients. The auditor can continue working for the client, but should ensure that the audit firm's credit control department are informed of the outstanding fee. Now, the credit control department does only deals with their receivables. Why they will be actually dealing with the firms? So they are dealing with the client's receivables, not with the firm. No. No work should be performed until either payment is made or a repayment plan agreed. No work should be performed. Either the payment is made or a repayment plan agreed. Yes, we will be telling them that, look, tell us when you will be giving us the payment. If they refuse that, okay, we are not giving the fee, then we should consider the last resort, the resign thing. So this is the most suitable option. Otherwise, they should have written here that discussing the matter with the client's audit committee or conducting the independent review. That would have been better in this case. But anyways, by comparing this with the first three options, D seems to be the right option. Because obviously you need to discuss with them that when you will be paying us uh, the fee.